Hey guys, it is Julie here with JT Wealth. Today we're taking a look at the best and worst performing stocks of 2022, plus what my biggest investment of the year was. So let's get into it. Alright guys, it is the first week of 2023 and many of us are welcoming the new year with open arms as we say farewell to 2022, a year that had a lot more downs than ups as the market saw historically poor returns. To usher in the new year, we're going to take a quick look back at 2022 and some of the best and worst performing stocks of the major indices. I'm then going to share with you what I've been pouring my money into this past year, despite it continuing to decline, and share some advice that has helped me get through this past year in the market as well. So let's jump right in, and if you're wanting to follow along, we'll be looking at an overview of the major indexes through TipRanks. You can get detailed breakdown of the S&P 500, Dow Jones, and Nasdaq by clicking on the tickers up at the TipRanks homepage. And you can use my links in the description down below if you're wanting to unlock 10% off premium subscriptions. Now let's start off with the S&P 500. The S&P 500 index is a market cap weighted index of the 500 leading publicly traded companies in the US. The S&P 500 is largely regarded as the best gauge of the overall US stock market. And as we all very well know, it has been a rough year for the stock market. The S&P 500 index itself is down nearly 20% over the past year. But there was still some green to be seen. And the top performer of the S&P 500 was Occidental Petroleum, seeing a whopping 104% yearly gain. Overall, oil and gas had a strong year after Russia invaded the Ukraine, crippling global oil supply. But Occidental Petroleum also had Warren Buffett scooping up handfuls of the company. Berkshire Hathaway has been pouring billions of dollars into the company, now owning over 20% and about 195 million shares. The worst performing stock on the S&P 500 is one that had massive popularity over the last few years. That is none other than Elon Musk's Tesla. They've seen a decline of 69% the past year. There have been plenty of headwinds facing the Tesla stock this past year, from COVID lockdowns in China, ongoing supply chain issues, and a decline in demand. But they also had some big insider selling. Over the past year, Elon Musk has sold $22.9 billion. Of course, a lot of this was in relation to his purchase of Twitter. And a lot of Elon's attention being on Twitter and less on Tesla has also been cited as a reason behind the stock's decline. Now, taking a look at the Dow Jones. One of the oldest equity indexes, the Dow tracks 30 large publicly owned blue chip companies that trade on the New York Stock Exchange and the Nasdaq. And with that heavier weighting in blue chip companies, they have seen less of a decline this year, but still down over 9%. Taking a look at our best performer in the Dow, we are once again in the oil and gas industry. The biggest gainer goes to Chevron, with gains of over 55% this past year. With soaring oil prices, Chevron posted huge profits and cash flow in their quarterly reports. On the flip side, we did see a lot of tech companies struggling this year, and in the Dow Jones, that led to Intel being the biggest loser with losses of 48%. With many challenges in the semiconductor industry, Intel saw a lot of supply chain disruptions, plus saw a big decrease in purchases from their major business customers. Now, taking a look at the tech-heavy Nasdaq. The Nasdaq 100 is a stock market index that tracks the most actively traded non-financial U.S. companies listed on the Nasdaq Stock Exchange. This leads to the Nasdaq being more tech-heavy, and the tech industry had a hard time this past year. The Nasdaq is down about 33%. So it is no surprise that the biggest losers on the Nasdaq are all tech companies, and there are a lot that had losses of over 60%. The worst performing stock in the Nasdaq 100 was Peloton, down about 77% the past year. Now, Peloton was a huge gainer during the pandemic, when at-home workouts were all the rage as no one could leave the house. But they have now been struggling as everyone gets back to normal life, and the at-home workouts are declining. They have plummeted multiple times throughout the year with disappointing quarterly results. On the flip side, our best performer is actually a Chinese stock, which is a sector that had plenty of its own volatility this year. Leading the Nasdaq 100 was Pinduoduo, with gains of 45%. The Chinese commerce company has been able to post solid earnings results throughout the year. So that is a quick look of the best and worst performers across the three major indices for 2022. Now, I wanted to share with you guys what has been my biggest investment this past year. I have been dumping money in this month after month despite seeing continuously red returns. But I am looking at this investment for the long term, planning to hold it for years to come. While the past year has been rough with a lot of red, we will look back at it in years as a great buying opportunity. The stock market is one of the few places that we hate to see things on sale, but there's still some great companies out there. So in order to get as many of those great companies on sale as I can, I've been dumping money into the VOO. That is the Vanguard S&P 500 ETF. Yep, an ETF. I'm sorry, it's not more sexy and exciting than that, but with this ETF, I get easy access to some of the top companies and really one-step diversification. The top 10 holdings include some fantastic companies like Apple, Microsoft, Amazon, and Google, which are staples in many people's portfolios, as well as some opportunities like Tesla, United Health, and top performers like Exxon. And yes, it is down nearly 20% this year, but that is exciting news. We're scooping up a lot of great stocks at a great price. And this brings me to some of the advice that has been helping me get through this past year with a lot of red. That is, when in doubt, zoom out. And by that, I mean take a look at the historical charts. When we look at 2022, it's easy to focus on this terrible decline and get a little worried. But when we zoom out, we can see other similar declines where the market then recovered afterwards. If we keep zooming out further, we see multiple instances of this across history. And in fact, where the market has gone down, it has always recovered afterwards. There are some naysayers out there that say this time is different, it's not guaranteed, this is worse, but to that I just say I don't think we're that special. I think history will continue to repeat itself, and where we saw a decline, we will eventually see recovery. The goal is to just stick to your long-term plans and don't get dissuaded. So that is just my simple advice for staying on track during daunting times in the market. Take it for what you will. I know we all have different investing styles and such, but for the long term, I am sticking to plan. So that's it, guys. A quick recap of the best and worst performing stocks and where I've been putting my money this past year. Let me know your thoughts in the comments. Did you make some money off of any of those top performers, or are you seeing a lot of red in your portfolio too? I always love hearing from you, so let me know your thoughts in the comments. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Please make sure you're always doing your own research and due diligence. Thank you guys so much for watching. I hope we have a much better and greener 2023, and I'll see you back here next time.